Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. Alright guys, welcome back to yet another episode of the Young Investors Podcast. Hamish, I'm still without my camera.
Yeah, what's up with that? Come on, you gotta where's the camera?
I thought it was gonna be quite an easy process. But I took it to the people and then they shipped it off to Adelaide for it to get assessed. And then they say that will happen in 2 weeks' time, at which point they'll give you a quote as to whether you want to proceed with the repair. And I think I actually just got an email that I haven't opened before saying that it's maybe they've had a look at it. Oh yeah, I do have the quote right here. How much is it going to cost me? Whoa, this is tense, Hamish. Well, actually, that's not too bad. It's going to cost me $400. Wow, I was expecting it to be much.
Yeah, that's actually not that bad.
Worse.
Yeah, because I think I'm trying to. Well, this is for the body of the camera, right? It's not the lens. It's the actual camera that needs to be fixed, I think, right? So
the lens mount was deformed and the alignment was out, so they replaced. But the lens itself was not broken. Replace parts. Yeah, there we go. Not too bad.
Yeah, not too bad, actually. Not too bad at all.
I'll take that.
Yeah, well, it's going to...
There's an interesting start to the podcast.
Yeah, well, it's going to cost less than the replacement I have to make for my hard drive, which just corrupted on me right as I was making my video. So I finally...
What happened? Tell me.
Yeah, so okay. Well, first of all, I finally posted on YouTube for the first time in like 6 weeks. So I'm back on YouTube. But just as I was about to go to edit this video, I just plug in. I have like a backup like SSD that I edit off so that it's kind of quick. And I just plugged it in, and it just corrupted. So I don't know.
Spat the dummy.
Yeah, I mean, I was able to get some stuff off it. But I've yet to actually try and recover the entire disk. So, but yeah, it would be helpful if I could, because basically my entire work on YouTube back to 2019 is on that drive. So,
yeah, wow.
Yeah, it would be nice to not lose all my assets for the last 6 years. But we'll see. We'll see what happens. It is what it is. But
if we see like a clean refresh of your channel, we know what's happened.
Yeah. Yeah, exactly. Yeah, completely new. New art design and everything. So, but that's okay. I'm back on YouTube now. Finally,
it's good to have you back. How long was your break in the end? It's like a month.
It was a while. I think it was like 6, 7. No, it was like 5 or 6 weeks. So.
Wow.
But it's good. It's funny posting after a long time, because you do wonder, is anyone even going to watch this? Does anybody know that I exist anymore?
Remember me.
But no, I guess you can take a month off and everything's fine. So there you go.
Nice. That's great.
Yeah.
All right, mate. Well, let's get stuck into this podcast. Hey.
Yes.
What amazingly interesting news stories have you found to talk about this week, my friend?
Wow, thanks for the hype up. I'm going to give us a preview of earnings season for Q4 2024 results, and the full year 2024 results are finally upon us. So I'm going to give us a little bit of a preview of what to expect and what the market is expecting. I'm also going to talk through the latest US inflation figures for the month of December.
I got to talk about this TikTok stuff going on, because they're facing that ban. That D-Day is creeping up closer.
Yes.
And on top of that, I'll also talk about you remember our good friends Hindenburg Research?
Yes.
They always cause a stir. Give us a little something to talk about. Well, there's another interesting news story coming out about Hindenburg, which I will talk about later on.
Awesome. All right. Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days.
All right. In we go. I'll start. Can I start by talking about this TikTok stuff?
Yes. Yeah. I'm curious to hear about this because I know this is happening, but I don't know the details of it.
Yeah.
And it's pretty soon, I think, right?
It is pretty soon. I think everybody kind of knows what's going on. So the idea, the United States is going to supposedly implement a ban on TikTok, which is owned by a Chinese company called ByteDance, and they're banning it due to national security concerns. So the ban is scheduled to take effect on January 19th.
Whoa.
So only, as of recording, a few days away. And that's unless ByteDance divests its ownership, the US ownership of the app. So they can keep doing their thing. I think it's called
The
Douyin or something like that in China. But the US division of part of the app, they have to divest it. US officials have long expressed apprehension that TikTok's Chinese ownership could allow the Chinese government to access American users' data or influence content. They say that poses a national security threat. In response, the Protecting Americans from Foreign Adversary Controlled Applications Act, oh my God, they need to think of just some simpler names for this stuff, seriously. Or they put in brackets, how's this for an acronym? The PAFACA, the PAFACA, was enacted in April of 2024. This legislation mandates that applications controlled by foreign adversaries, specifically TikTok, must be sold to a non-adversarial entity or face a ban in the US. So TikTok is staring at a potential ban if the US Supreme Court decides to uphold the national security law. In which case the service providers such as Apple and Google would be penalized for hosting the app after the Sunday deadline. So,
right.
And from all accounts so far, the like bits and pieces coming out of this story is that the courts do intend on upholding this law. I guess a lot of people are talking about whether this will actually. It's kind of just like a game of chicken, whether anything's actually going to happen. But what has been said is that it definitely will happen. So
yeah,
I guess take that with a grain of salt. But yeah,
it does seem surprising. Like it's such a popular app. Like it would be. It does feel like that is kind of the vibe of it. It's like, wait, is this really actually going to happen? Are they actually going to remove it in a couple of days' time? That it just it seems rather surprising.
Yeah, it's weird, isn't it?
But I guess we'll see in a couple of days if it actually ends up going that way. But it looks like it.
But this is where it gets interesting, Hamish. You'll like this. You like this. ByteDance has not indicated that it will sell the app's US unit, but the Chinese government has considered a plan in which ex-owner Elon Musk would acquire the operations as a part of several scenarios in consideration, Bloomberg News reported on Monday. Elon Musk is going to buy TikTok. Oh, our Lord and Savior.
Oh, no.
Thank you, Mr. Musk. Did you hear about this before we started the podcast?
I haven't heard about this at all. And that's kind of crazy. I mean, that would have to be a bigger purchase than the Twitter purchase, right? I mean, surely.
Yeah.
Would this be just buying the US unit? I guess.
Yes.
But even still, that would have to be a big.
I can tell you.
Oh, you can tell me.
Yeah.
Go ahead.
I can tell you, TikTok's US operations are set to be valued at around 40 to 50 billion US dollars. That's according to Bloomberg intelligence analysts. And that was an estimate from last year. But yes, they also, they note it's not clear how Musk could pull off such a transaction. Sorry, I'm kind of skipping to the end here. Whether it would require the sale of other holdings or whether the US government would approve. He paid $44 billion for Twitter in 2022 and is still paying off sizable loans. So he'd essentially have to do what he's done with Twitter again.
Right.
So that's I kind of skipped to the end there, but it's a reasonable chunk of change.
it's a big.
But
big
it's funny that
expenditure.
like this is coming out of the Chinese government. Like some of the Chinese government's like contingency plans is to have Elon Musk buy it. Like it's so funny. I don't know. This world just gets stranger every time. It says here, Beijing officials strongly prefer that TikTok remains under the ownership of parent ByteDance. The people say, and that the company is contesting the impending ban with an appeal to the US Supreme Court. But the justices signaled during arguments on January 10th that they are likely to uphold the law. Senior Chinese officials had already begun to debate contingency plans for TikTok as a part of an expansive discussion on how to work with Donald Trump's administration, one of which involves Musk, said the people, asking not to be identified. Under one scenario that's been discussed by the Chinese government, Musk's X, formerly Twitter, would take control of TikTok US and run the business together, the people said. With more than 170 million users in the US, TikTok could bolster X's efforts to attract advertisers. Musk also founded a separate artificial intelligence company, XAI, that could benefit from the huge amounts of data generated from TikTok. So I guess there are synergies for Elon Musk. There's a big advertising problem, I guess you could say, at X. Maybe owning or incorporating TikTok into the platform somehow steps around that advertising problem. This is all speculation, as you can probably hear by the tone of my voice. But I guess the point is that while it seems outrageous, I guess there could be some advantages for Elon Musk. Maybe it's interesting to him. I don't know.
Yeah, buy another unprofitable social media company. No,
Yeah.
I actually don't
Is
know. if-
TikTok unprofitable?
I actually don't know. I'm not sure.
Yeah.
I would assume so because it's still quite young, but I don't know.
Right.
Yeah, that would be.
Yeah, I'd have to
that'd
check
be-
that as well. I don't know either.
I feel like that would be quite surprising if Musk ended up buying the US operations of TikTok. I think I would be quite.
It'd be crazy.
I would be quite surprised by that. That's
Yeah, that would be wild.
yeah. That's a
That
lot
would
of money
be-
he would be then sinking into social platforms and kind of, I don't know, taking quite a deviation away from his other businesses that actually make money.
Yeah. Yeah. It says here, it's not clear how much ByteDance knows about the Chinese government discussions or whether TikTok and Musk have been involved. It's also unclear whether Musk, TikTok, and ByteDance have held any talks about any possible deal. It's interesting though. This is kind of going back to like who has the power of negotiation here when it comes to the Chinese government versus ByteDance, because it says that the talks in Beijing suggest that TikTok's fate may no longer be in ByteDance's sole control. The Chinese government holds a so-called golden share in a ByteDance affiliate that gives it influence over the company's strategy and operations. TikTok maintains that the control only applies to the China-based subsidiary, which is Douyin, I think. I'm not quite sure how you pronounce it, Douyin, and has no bearing on ByteDance operations outside China. Still, Beijing's export rules prevent Chinese companies from selling their software algorithms like the one integral to TikTok. Because the Chinese government would have to approve of a sale that includes TikTok's valuable recommendation engine, it has a significant voice in any possible deal. So it's kind of interesting. Who's pulling the strings here? You know, is it ByteDance? Is it the Chinese government? I think ByteDance might have to agree to kind of whatever the Chinese government wants to do, but.
Yeah,
it's an interesting one.
Yeah, it's certainly like a different dynamic than how we kind of expect US businesses to operate. But yeah, I haven't looked into that's actually quite interesting. I haven't looked too much into the details of like how involved the CCP is in that kind of that subsidiary and how that works. But
Yeah.
it sounds interesting. I'll have to take a deeper look at that.
Yeah, to be honest, I think most people, even myself, like nobody would really have a great understanding. I think it's just one of those things where, we thought that Alibaba and Tencent were free to just do whatever they liked and kind of grow, being one of these like crown jewels of China. And then all of a sudden you see Alibaba giving a donation to the Common Prosperity Fund, like a $10 billion donation out of nowhere. It's like, I'm pretty sure shareholders would have preferred a $10 billion share buyback or a $10 billion dividend as opposed to a donation.
Wait, what did you say? $10 billion bribe? Oh, sorry, donation. Sorry, go on.
Oh, donation.
Sorry,
yeah,
continue.
Exactly. Yeah. So I think there's a lot of that. I don't think anyone could call themselves an expert of how they know that it'll play out this way, because I think when it comes to talking about China and Chinese control of their businesses, it's, who knows? But,
Yeah.
There we go. So yeah, D-Day's getting close. January 19th. So by the time this podcast comes out, it'll probably be making the news in quite a pressing way, unless something gets figured out. Oh, who knows? Maybe Elon Musk is now the owner of another social media app.
What do you reckon the probability of that is?
It's got to be low. It's got surely it's got to be low.
1%.
But then again,
0.1%.
They're touting Elon Musk as like this magic mediator between the Trump administration and China. So I don't even know. I don't know how close he is to all of this stuff. Whether he would even, he's probably learnt his lesson from Twitter. I should say.
Yeah, you would think so. But yeah,
I don't know. What do you reckon? Let's go percentage chance that he buys it. I'm only giving it like
1%.
I'd give it more than 1. I'd give it like 10. I think 10% chance.
Yeah, I'd want some pretty high odds on that. Like if you wanted me to take that bet, it would have to be like 50 to 1, 100 to 1. It'd have to be pretty damn high.
Fair enough.
Yeah, but I guess
but yeah, that is the TikTok news, Hamish.
Yeah, I guess next week we'll do a bit of a follow up, maybe even just a quick follow up to see.
Yeah.
It's
what the hell happened?
Yeah, I think it's pretty likely it will be banned. But in case there's any crazy twists in the story, I guess we can circle back.
Yeah, there's going to be a generation. All the young generation, they're going to be out at public parks and going for runs and connecting with nature and their families. It's going to be amazing. It's like, what happened? Oh, TikTok got banned.
No, there's going to be a bunch of kids withdrawing.
True.
They need their fix. Have you seen those videos of like kids sleeping and they're like swiping in their dreams? Have you seen that?
No.
It's so dystopian. There's a video on YouTube of like it's got to be like a 6-year-old kid who's like asleep and he's doing this like in his sleep.
Oh my God.
Yeah, it's really dystopian. So yeah, once it's going to get banned scary. And there's going to be a bunch of kids withdrawing and looking for a fix.
Uh-oh. All right, Hamish, moving on. What's going on with earnings season? You're going to give us like a bit of a backdrop, are you?
Yeah, so earnings season is finally upon us. This is
it is, yeah.
my favorite earnings season of the year as well, because we get not only Q4 results, but we also get the full year results for 2024, and then we also usually get some sort of plan or some kind of projection forward from companies for what they're going to do over the next year. And so, it's we're certainly going to be covering a number of companies and their earnings reports over January and February as they come out. But yeah, I thought I'd give us a bit of a backdrop as to the context of what's going to happen over the next few weeks. And so, of course, we've seen we've seen the market do some interesting things over the last month or 2 months or so. The market rose 6% after the Trump election in about 30 days. So it had a very strong end to the year. And then it essentially has been kind of just hovering around the same level. It's actually kind of funny if you look at the S&P 500 chart on like Google and you go the 1 month chart. It's like it's just up, down, up, down, up, down. It's like the market it's just kind of bouncing around within this range. And the market's kind of just waiting for some new data to see where it wants to go next, and we're going to get that in the form of earnings season reports over the next few weeks. I was reading a Wall Street Journal article around this, and I thought this quote was quite funny. Larry Adam, Chief Investment Officer at Raymond James, said, "This fourth quarter earnings season is probably one of the most consequential earnings seasons we're going to see in a long time." And I think that's the first time anyone's ever said that about a quarterly earnings report. I think this is the one.
This is the holy smokes, guys! You will not believe it.
I thought
if earnings are down, the world, it's fire, atomic war. It's bad. Nuclear weapons will be used. It's a big one. There's a lot riding on this.
I just love. Right, I love reading quotes like that because it's just it. Yeah, I don't know. Like, there's always somebody saying that about every single quarter, every single Fed meeting, every single inflation, whatever it is. There's always someone like, this is the one. This is the one that matters. So I thought that was quite funny.
I'm doing a video at the moment where I'm like looking back at just how crazy these analysts are and like how wrong they are. And I was just looking at over time, talking about like passive investing and whether people should like, whoa, the market's really hot right now, really overvalued, whether you should pull back. And I'm like, yeah, but people were saying this like way back when. And when I first started my channel and was first really getting into investing, 2016, 2017, around there, I just went and did an advanced Google search. I was looking at like stock market crash, stock market correction, just like headlines. Because as we know, the market was expensive back in 2016, 2017, yet for years the market just continued going up. And even just doing that quick Google search back in those date ranges, there were so many washed opinions or just like hot takes from Goldman Sachs or whatever. It's like, you need to sell your S&P 500 index funds immediately. Do not buy.
Yeah.
The stock market will crash. It's too hot right now. It's just crazy. Like, and I'm sure you could look at any time period and there's still people saying the exact same thing. So it really shows you, once you get used to it, I think once you've been like a couple of years, even like maybe a decade into investing, you really realize how little weight all of this stuff holds, all these opinions and that kind of thing.
Yeah.
It's quite interesting. There's always people saying something.
Yeah.
Whether that's going to be true or not.
Yeah.
Anyway, sorry, that was just a little anecdote.
No, I think it's important to say there's just so much noise in the world of finance and economics, and there's so many different data points that you can kind of point to, and there's always going to be one that's positive, there's always going to be one that's negative, saying something negative or positive. And so you can always kind of spin, and you will see, people on like CNBC and that sort of thing spin whatever piece of data that they've kind of put together. To form, what they think is going to happen over the next few months or the next year or whatever it is. You can pretty much make any opinion stick because you'll be able to find something. You'll be able to find some pattern. Whether it means anything or not, probably not. But yeah, no one really knows what's going to be happening. But yeah, I thought that guy's quote was quite funny. But it actually is somewhat of an interesting quarter. It's probably at least relative to the previous few quarters where company earnings really didn't actually go up that much. They were kind of pretty much, they went up a couple of percentage points. This quarter, the S&P 500 companies are expected to grow, and this is Q4 of course, grow their profits, grow their earnings by 11.7% above Q4 2023. And so this is actually the fastest expected growth rate since Q4 2021. So yeah, there's big expectations. The market is expecting big things from companies this quarter. Just to kind of give so the last time this is kind of the highest expectations that the markets had since Q4 2021. In Q4 2021, the market expected more than 30% in earnings growth, and that turned out to be a massive overestimation. And then that's kind of where we saw that market correction. The market was down about 25% in the months that followed that. That's certainly not the same as this quarter, but it does give you kind of an idea of what happens when the market expectations get really, really high and then they miss. Because the S&P 500 price level reflects the expectation. It's already reflecting that. It's already reflecting that companies will grow their earnings by 12% in Q4. And now we get to see if those expectations are met, missed, or exceeded. And it's also important to remember that when we're talking about the S&P 500, even though that's 500 of the biggest companies in the US, it's also very, very concentrated. So you have kind of a handful of big tech names that make up a huge piece of the pie. Don't know exactly what it is at the moment, but I believe the Magnificent Seven companies were close to 30% of the...
Or 31 at the moment, 31%. Yeah, you're right.
About 30% of the entire market. And so those companies are, of course, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. And so because they're 30% of the S&P 500, whatever happens to their earnings will obviously have a big impact on the overall S&P 500 earnings. And so those 7 companies are expected to see a 22% increase in profits in the fourth quarter compared to the previous year. So big expectations on those companies, which is not surprising because they've been performing very, very well recently, particularly when it comes to earnings growth.
True that.
The other 473 companies in the S&P 500 are expected to grow profits by 8.7%. So, clearly a lot of the growth is on the back of these big kind of tech companies.
How's that for a discrepancy though? The rest of the S&P is expected to grow by 8.7, which is still quite a lot. And then the Mag 7 expected to grow 22%.
Yeah.
That's mega.
Yeah, it's
unbelievable.
Yeah, it's pretty. Yeah, it's quite a difference. Yeah, it was like
it's like
I'm trying to think back. I can't exactly remember when it was, but there was a couple of quarters where the Mag 7 were growing. They were growing by like, I don't know, 10, 15, 20% in the quarter. And then the rest of the S&P 500 was in like an earnings recession. I can't remember exactly when it was. It was a few quarters ago or something. But it's not it's not as bad as that, but it is like that. You've kind of got these two parts of the market, and the S&P overall doesn't really give you a good insight into how, I don't know, businesses are doing, I guess, in America.
That's true. Yeah, no, that's very true. It's less and less representative as these companies take up more and more of the weight. But yeah, just to add context, like how crazy that is to expect a 22% year over year increase. I think for most companies, investors and analysts, they talk about double digit growth. And usually, obviously each company is different. But if a company's hitting double digit growth year over year, generally that's pleasing for analysts. In most cases, they want to see double-digit growth. That's all the hype. You hear those words all the time. So it's interesting, like, to put that in perspective. They're expecting at least, double what would normally make them happy. 22% increase, which is just it's phenomenal. It really tells you a lot about where the market's at the moment.
Yeah, and a large part of that does rest just on Nvidia as well, which has been, doubling, tripling their earnings. I think there was a quarter where they 10x their earnings, like year over year.
Yeah.
And so a lot of that growth has been kind of coming out of Nvidia, which has been kind of selling an enormous amount of these chips. And I think Nvidia is still expected, even over the next year, to almost double their profits again. And so, a lot of that kind of rests on what's happening with Nvidia. But yeah, it is it's quite something.
Yeah,
it's quite something.
It is bizarre. It is bizarre.
In terms of the different sectors of the S&P 500, financials are expected to see the biggest growth. They're expected to grow profits on average by 40%. And the worst performing sector is expected to be energy, which is expected to see a 26% decline in profits. And so that gives you an idea of what's going on in the markets at the moment. Financials are actually reporting at the moment. I didn't take a look. I think JP Morgan reported this week, and there was another bank that reported. I didn't actually take a look at it because I don't generally look at the banking companies all too much. But
boring.
But yeah, they're reporting at the moment.
Yeah.
And then looking forward into 2025, the market is expecting 15% growth in S&P 500 profits throughout 2025. And so, strong expectations continue to exist in the market, and that's exactly why the market's doing so well. In the video I just made just this week, I was looking at it and talking about Howard Marks and in his kind of memo that he put out recently. And it is quite shocking. I think 2023, the S&P was up 25% or 26%, and then last year was basically about the same. So that's two very, very, very strong years for markets.
Wild. So wild. Do we have anything else to talk about? That's a good little backdrop, I think, Hamish.
Yep. No, that's it. Yeah, as I said, over the coming weeks, we'll probably be picking out some companies to take a look at, especially the Magnificent Seven companies, to see if they can meet the high market expectations.
Yeah. Good luck. Man, I would hate to be like a CEO that's just having to try and meet lofty expectations all the time. That would just be such an uncomfortable... I just wouldn't enjoy that at all.
No.
Just constantly having to, the market's expecting us to grow 20% this quarter. It was like, shit. Like, I mean, we're doing 10, and I thought that was good. They want us to do 20. Like, oh, guys.
Yeah, and imagine you're 2 months into the quarter and you're way off the target. The pressure to do things that are not good for the long term of the company, but just to hit the target in that, in those last 30 days. To just try and like hit the number. It's no surprising that a lot of companies, do things that are not really in the interest of, the long-term investor, whether it's ratcheting up their share repurchases just to increase the earnings per share or whatever it is. There's a bunch of things that companies, that executives can do. And like you said, the pressure must be insane.
Yep. Not a job that I would like to have personally, but I mean, you get bloody well paid for it. So.
That is true.
All right, Hamish, let's move on, shall we?
Yes.
To Hindenburg Research. We know them, we love them. They always give us something interesting to talk about, exposing some sort of market scam, whether it be, Adani or Carl Icahn, or what was the other ones that they've done? They've done so many. I forget. There was a few other ones I've just forgotten. Some really obvious ones I've just forgotten. But anyway, unfortunately, Hamish, that's not going to happen anymore because Hindenburg Research is closing.
Wait, really?
Yeah, really.
Wow.
It really is. It says Hindenburg Research, an upstart research and investment firm that made a name for itself with several successful short bets, is closing. Founder Nate Anderson announced on Wednesday. It says, quote, "As I've shared with family, friends, and our team since late last year, I've made the decision to disband Hindenburg Research. The plan was to wind up after we finished the pipeline of ideas that we were working on. And as of the last Ponzi cases, we just completed and are sharing with regulators, that day is today," Anderson wrote in a note posted to the firm's website.
Wow. Wow.
That's it.
So Adani got to him.
Maybe they've just got like so many mounting like legal challenges from these companies that have taken massive hits.
Yeah.
Maybe he just can't handle the heat anymore. Maybe he's got death threats or something.
Yeah. Someone found some dirt on him.
Yes. Yeah. It's like, all right, I got to bounce out of here.
Bad luck.
But yeah, Anderson founded Hindenburg in 2017, and the company has published several negative research reports about dozens of companies in the years since. One of Hindenburg's first high-profile reports came in 2020 and was focused on vehicle startup Nikola. That's right, Nikola. Part of the report included an allegation that Nikola had faked the autonomous capabilities of a semi-truck in a video, which the company later admitted. Nikola founder Trevor Milton was later sentenced to 4 years in prison.
Whoa.
Many of the targets of Hindenburg's reports were smaller companies. The firm has also gone after the companies of major financial figures, including Carl Icahn's Icahn Enterprises and the business empire of Indian billionaire Gautam Adani. The most recent report filed by the company was on January 2nd about auto retailer Carvana, which it called a father-son accounting grift for the ages. In a statement, Carvana called the firm's report intentionally misleading and inaccurate, but the stock fell more than 11% the day after Hindenburg published its report. Hindenburg was a short seller. That's the other thing to remember about Hindenburg. They are a short seller as well as a research house, so you always have to kind of go in with a grain of salt because they are taking the opposite bet. They are betting on the company's stock price going down. So it does tell you that their report's not always going to be fair and balanced and optimistic. It's going to be very damning in any way possible. But yes, it says here, this means the firm was placing bets against the companies it was researching, putting it in a position to profit if the stock declined, which happened on a lot of cases. But it's not clear how much money Hindenburg made from its short bets. But personally, I think it was a pretty penny because in a lot of these cases, their reports cratered stock prices. I remember we were talking to Adani. I think Adani's like multiple public entities, but one of them was down like 30-40% on the back of this research report. So, but yeah, no more. See you later, Hindenburg.
Yeah.
It was nice knowing you.
It's kind of a funny business, isn't it? It's like, I mean,
it is a funny business.
On one hand, it makes sense. Like if they're putting out research and they believe that, you know, what they're putting out is true and that the companies should be going down in price, it makes sense that they would also take that bet. But it is kind of, yeah, the way that you said it is also kind of funny. It's like they're taking the bet and then putting the report out, which in almost every case means the stock goes down. It's kind of a funny business. Yeah. It's like a legalized stock manipulation, but I guess it's not because they're not lying in their reports. Like they're putting out real information.
As long as you're not lying, then you're okay. Yeah, you're allowed to speak the truth.
Yeah. Yeah, funny.
But, yeah, exactly right. But there you go. It was kind of nice, actually. I quite enjoyed reading those research reports because some of the crap that they uncovered was just unbelievable. Like in some cases, reading through some of that Adani stuff, I was like, what the heck is going on with this company? So much fraud. It really, I don't know, research firms like that, I'm a bit mixed on short selling. I don't really like most short selling because it does kind of drift into just like dragging companies through the mud in many cases unfairly because the short sellers are not really good actors. They're bad actors. But it was interesting. They did bring a lot of fraud to light and that's a good thing if we know that, you know, there's some fraud going on and then it can get investigated and people can go to jail or not go to jail. They face the consequences of their fraud. Then that ultimately is a good thing. So
yeah, short selling is interesting because it's not, you know, it's quite a hard way to make money. You know, the stock can only go down 100%. So there's a ceiling to how much you can make, and the timing matters a lot because you've essentially got loans, right? You're essentially making an investment on margin in essence. And so the timing also matters, and what the stock does in the short term. If it goes up too much in the short term, that, you know, there's a risk. Whereas if you just own a stock and it goes down a bunch, you can just sit on that. There's no interest payments. There's no margin call.
Yeah, the broker's not asking you to pay another brokerage fee every month. Hey, where's your next brokerage fee? Hey, where's your next brokerage fee? Just to keep your position open.
Yeah, exactly. And then there's no ceiling. It's not like if you buy a stock and it goes to 200%, you're done, which is the case with a short sale. If it goes to zero, you're done. It can't go any lower. So it's interesting that anyone would want to be in that business. because the risk reward seems quite asymmetrical. But I guess if you know what you're doing, then it can be a profitable bet.
I think kind of the argument that I've heard from a lot of short sellers is that it's easier to find companies that suck than companies that are great. Like that's I think, and when we look, this is the problem, because on balance, the stock market over the long term trends up and like business performance improves. So you're kind of battling against that like general trend as well of like stock prices probably more likely than not will go up over time. Yeah. But then at the same time, and I'm sure when you're looking into businesses, Hamish, it's pretty easy to spot when a company sucks.
Yeah.
It's like very easy when you're just like looking at a valuation and you're like, holy smokes, you know, this company's valued at $100 billion and makes jack shit, you know. It's easy to find those businesses where it's just like not good.
True.
But then the hard thing is that there's that famous quote, right? The market can stay irrational longer than you can stay solvent.
Yeah.
And that's going back to your idea of the timing of it is very important. Because you are under the pump as soon as you open a short position. You are under the pump. You need that price movement. For every day that the price doesn't go down, you know you're forking out money to keep that short position open.
Yeah. Well, nothing will beat Bill Ackman making a short bet against the S&P and then going on CNBC and crying and then making like $1 billion from it or something. Do you remember that?
Did he cry on CNBC? I didn't know that.
Yeah, he like called in and was like crying about COVID or something. I don't know. It's on YouTube. I can't exactly remember what he was
like
saying.
hamming it up, being like, "Oh, this is so terrible. It's going to take the stock market." Was he like feeding into his short narrative?
He was. And at the same time, he was offloading this short bet. Yeah.
I could just see it's going to get worse and worse.
That's one of the best CNBC interviews that's ever happened. Because he wasn't even being interviewed. He called in. He called in to CNBC.
Really?
Yeah, it's really funny.
I can't believe I haven't seen this.
Yeah, he made an enormous amount from that bet. Look up.
He did.
Yeah, I can't remember exactly how much it was, but it was a lot.
Billions and billions of dollars.
Yeah. And it wasn't even a big bet.
And it was a tiny bet too.
Yeah, it was only like it was less than 100 million.
Millions,
I think was the bet.
Yeah.
I think he made 20 or 50x or something insane in like a couple of weeks. But yeah, that's
I'm looking into it.
That's got to be one of the best short bets.
$26 billion. Yeah, that's crazy. The 27 million trade.
Yeah.
That was how much.
And what was it, about $1 billion, I think, he made? Or something like that? It was
2.6 billion. I think he's turned 27 million into 2.6 billion.
It's 100x. 100x.
It's not bad.
That's insane. Yeah.
Yeah. 27 million to 2.6 billion. That is phenomenal.
Yeah.
Yes, please. I'll take a bit of that.
Yeah. So there you go.
Anyway. Okay, Hamish. That's all I got on Hindenburg. Let's talk inflation.
Yeah, just a quick update. Nothing too crazy to talk about, but we do have the December Consumer Price Index data out of the US. Prices that consumers pay for a variety of goods and services rose again in December, but closed out 2024 with some mildly better news on inflation, particularly on housing. Is what CNBC reported. The Consumer Price Index increased 0.4% for the month, and for the 12 months to the end of December, or for the 12 months of 2024, the inflation rate was 2.9%, slightly higher than 2.7% reported in the previous month. And so, slightly ticked up, still under 3%, which is the kind of the healthy range. The US likes 2%. So it is a bit higher than what the US generally looks for, but it's not 9% where it was back in 2021 or whenever that was.
Thank goodness for that.
Yeah.
No, it's good. It's actually come down a long way.
Yeah.
When you zoom out, like people are still worried about it, and fair enough, you still be a little bit concerned about it. But considering where we were, it's come down a lot. I'm very glad that it's come down as much as it has.
Yeah. And, the cumulative effect of higher prices is going to be permanent, and that's going to be, people are going to be catching up on that for a while, and that does suck. But it's, we're all very grateful that we didn't have 9% inflation for like 2 years in a row or something like that, because that would have been that would have been quite bad. It starts to compound very, very quickly at that rate. So yeah. Core CPI, which excludes the food and energy categories, which are generally a little bit more volatile, had an annual rate of 3.2% or plus 0.2% for the month. So just outside the 3% kind of range. The biggest categories, energy increased 2.4% in the month, driven by a 4.4% increase in gasoline prices. And that increase in energy was actually 40% of the entire CPI increase in the month.
Oh.
And so a lot of the kind of, if you think of like the overall price of the kind of the basket of goods and services, 40% of that increase was just energy. So energy was a big contributor.
Crazy.
Food prices rose 0.3% in the month. Shelter rose 0.3%. Used cars and trucks rose 1.2%. Bad news if you're an eggs and bacon breakfast person in the US, egg prices rose 3.4% in the month. Yeah. They're
Still, you remember that there was that one month where eggs rose something crazy, like 30%, like the biggest contributors to inflation this month, and there was just like eggs.
It was like eggs, milk. It was like all the breakfast stuff.
Yeah, it was like dairy. That's right. It was so funny. I can't remember. That was so fun. We're so used to reading like, oh, the biggest changes were in, energy prices, fuel prices went up, housing went up. But that month it was just like eggs.
Yeah. So Band-Aids are up
Milk.
80% this month. Wait, what?
Shit. No, it's quite funny.
Yeah.
There you go.
So yeah, eggs went up the most. So there you go.
You have to go from having 3 eggs in the morning to 2, Hamish.
Can't they just make the chickens just like crank them out a bit faster? Just chop.
We need more hormones.
Yeah. No, but that's basically it. The next Fed meeting will be the 28th of January. The market has a near 100% confidence that rates will stay the same at that meeting and a 50-50 chance of 2 quarter-point rate cuts for the full year, which is what we spoke about last week. But those are not expected to come until May, June. So there you go.
Yeah. What do you reckon? What's your guess?
I reckon any predictions about interest rates are pointless.
I would agree with you, but I would also guess that they are going to keep rates the same.
Yes.
I don't see why they would drop them.
No.
But who knows?
Yeah, I think that's seems pretty unlikely. But who knows? You never know. You never know.
You never know. You never know.
You never know.
You never know when this podcast is going to end. It's going to be right now. Thanks for listening, everybody. Appreciate it. What do you got on for the rest of the week, Hamish? You doing anything fun?
I don't know yet. I'm not sure. Probably start working on a new video. Now that I'm back on the.
You got some ideas?
Yeah, I've got a couple ideas. Yeah. I won't spoil them. You have to subscribe. No. You have to have your notifications on, and then you'll see it. So
exactly.
Yeah.
Exactly. Yeah. Exactly right. Gosh, you're good at this. All right, guys. Thanks very much for tuning in, as always. We very much appreciate the hour that you give us every week. And with that said, we will bounce out of here. Have a good weekend, everybody, and we'll talk to you guys next week.
See you guys.